We will just wait for maybe 2 more minutes and have some more people join in, and then we'll start. Okay, everyone, it's a little past 5, so we should get going. But I'm so glad to have all of you here. Happy New Year to all of you. And this webinar, of course, is a part of our webinar series, which we've been doing to educate our potential investors and just to generally educate healthcare professionals. But the topic of this webinar today is New Year, New Goals, Financial Goals for a Healthcare Professional. Again, my name is Anam Omer. I am, a gastroenterologist by profession for people who don't know me, who are new here today. And we welcome you all to our webinar series. Okay, this is the number to call. So I would like all of you to save it. It's 281-559-7061. It goes to our investor management team. And if you want slides, just text us here and we would be happy to share them with you. Just a little disclaimer before we kind of dig in. This webinar, again, is for education purposes only. I do go over it every single time I start, so it's probably some repetition for a lot of people, but this is very important that our goal to do this webinar is for you all to get educated, but you should not consider it as a pitch or a legal or accounting or investment advice. Of course, the reason for this webinar series is for you all to get more educated, to get some, to take away some good advice from us. But again, we want you all to do your own due diligence and consult your own attorney, financial advisor, or CPA for legal matters, for investments, and for any tax specific questions, because that's the hardest part of all of this. A lot of people ask me, particularly healthcare professionals, about tax. So, that's something that you would like to discuss with them. But yeah, we're happy to give you some good tips. So a little bit about Hedwig Capital. So as you all know, I am a gastroenterologist. I do work as a gastroenterologist, but being a part of Hedwig Capital, which is a company that my husband and I founded back in 2017, I am a co-founder, of course, and I'm the director of business development. I was primarily initially just doing my own training, sort of my medical professional related work. But over the years, I've learned so much from our entire team, from my husband, from just attending a lot of educational sessions myself, conferences that I just have been discussing a lot with other healthcare professionals, and I was like, why not? So I just kind of enjoy this so much that I was like, I told my husband that I'm going to get on this and try to do this as well. So I do manage business development with him, and of course help with investor relations as well. So the reason why we came up with Hedwig Capital back in 2017 was it was it we built it with the sole purpose of having a platform to invest our own savings. Of course, we weren't, was still in training at that time, but I think we did have a very clear vision, which I'm very, very fortunate and happy that I did, and primarily my husband had at that time, that we just needed a safe place to invest our own wealth and expand from there. So that's where Hedwig Capital came in from. Our goal is to provide, with our Hedwig Capital is, of course, an investment platform which is open to everyone. I primarily deal with healthcare professionals, and I think it's an excellent spot for healthcare professionals to kind of have a trustable team to invest with us. but we provide investment opportunities that allow you freedom to carry on with your own job, to have your own sort of personal work life, but at the same time feel secure with having a secure space for putting away your investments and gaining and basically eventually achieving financial independence, which or financial freedom, which is everyone's goal. A little bit about our team. So my husband, Shamim, is the founder and CEO of Headway Capital. He's been doing real estate for many, many years. I mean, of course, before 2017, we had a bunch of single family real estate rentals, short-term rentals as well. At that time, at one time we had a portfolio of about 30 houses. That is just around the time and before we founded Headway Capital. But we were getting really, I would say, sort of exhausted with putting in a lot of work and not making enough out of it, or expanding at the momentum or the pace that we would like to 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 expand at. And that just made us think of, that we need to think wide, and that's how Headway Capital came in with. Now, of course, it manages the most of the running of our different programs, investment opportunities, and reviews deals, gets them, and does all of that stuff. So he's definitely the main person who's doing all of this stuff. Then an important person to know is Brian Alfaro. He is the main guy here. Again, wealth of knowledge as well. He's the director of business relations. Has many, many years of real estate experience himself, both in single family real estate, which he himself owned and managed his own single family properties before he entered into multifamily real estate, and was working with a different multifamily group before he joined Headway Capital. We're very fortunate to have him. He's the first person that most people end up talking to, even after before they kind of just talk to me. But he is just an excellent contact to have. I would think that he just helps everyone in any way and every way possible. So definitely the person to reach out to. And last but not least, we have Amar Naqvi, who is our Chief Financial Investment Officer. He's the point of contact for all our investors once they reach to that point. And of course, he's the person who manages, who's going to be sending out your bi-weekly financials, would be the person to reach out to if you have any questions about, your investments generally. Okay. So a little bit of track of Headway Capital. So this is our track record, which we're extremely proud of. We have over upwards of 539 million. These are a little bit not updated records. We have much more now, but at least 539 million plus assets under management, which accounts to more than 3,300 units that we own, manage as well. Now, Headway Capital has had a very, very good success with providing a very good average annual return, which of 25 to 30%. But this is for long-term investments, and this is after that long-term investment sells. Your preferred annual return will be 8 to 10% for a short-term investment, but if it is a long-term investment, once the investment sells, you should expect to have made 25 to 30% on your initial investment per year on that, for that investment. And we have, of course, have more than 430, about 500 active investing partners right now. But a lot of them are like friends as well over the years, really trust us, and we're very fortunate to have such a good team and family who just trust us with their money, and as well as are actively participate in giving us really good advice as well, and really help with us managing our investments. So how have we been this successful? I think we've just I would say that whenever somebody asks me about how did we do it, I think have been just we've been lucky, I guess. When we started back in 2017, market was different. It's probably might be harder to do it now, but I think we've just been very focused, purposeful, consistent, and disciplined. With how we've analyzed deals, we've just been very fortunate to have picked really good investment opportunities, which have been very successful for us. I think our whole key in the whole process has always been, finding a good deal where we can trust our own money as well as money of our investors. It's just not, we're mostly the main capital partner in all our investments, and mostly the biggest investment is our own. So ultimately one has to protect themselves as well. So it's Headway Capital is not about it's not about us making money out of our investors. It's us making money with everyone. So we're a team here, and we that is how we work. And we've just been, I guess, just been very lucky, very successful, and we've worked really hard. So a little bit about back to our topic for today, which is the kind of goal setting for 2024. So yeah, I guess we're all very excited about 2024. For me, at least, I felt that 2023 was just passed by really fast. But fortunately, I was just the past month in December, my husband and I have made this thing about us sitting together for actually multiple days the whole month. It's our dedicated financial planning month for next year. And we just realized that our list that we made the previous month, we were fortunately very successful in achieving at least, if not all of it, most of it. So definitely having that checklist was really helpful, but it just passed by really fast. So we're really excited about 2024, and what it has in for us. So first and foremost, we'll be talking about setting financial goals for 2024, very similar to what I just said, what my husband and I did last month. Probably some or most of you may have done it for yourself already, and if you've not, that's what we're going to be talking about. Second would be smart real estate investing tips, and some options of how you could potentially invest your money in real estate. We'll also talk about common investing mistakes that people do, and a little bit about balancing your career and investment, and how you can invest. So first and foremost, would be financial goal setting, and I think this is something that we all know. It's like this smart. This is how we talk to patients when we're talking about weight loss. At least we tell them to be specific, to make a narrow, a very specific, targeted goal of I'm going to be losing 20 pounds in the next 2 months. The goal needs to be measurable, so you're accountable. At least you know exactly what you're aiming at. The goal needs to be achievable. If it's just like an open-ended, unachievable goal that, okay, this month I'm going to start investing today, and that's going to be my first investment. I'm going to make $30,000 in passive income. That's not an achievable goal. That's probably not going to happen. So, that's your goal definitely has to be very realistic, very achievable, so that if you don't achieve it, if you just don't, so that your goal is not to set yourself up for failure. You need to make sure that it is something that you can achieve. So that is going to be a motivation for you to do more. It needs to be relevant, of course. It needs to be very important and worthwhile for you, and it needs to be time bound. So you cannot have just open-ended goals that, okay, in 10 years, or that is even time bounding it, but I'm gonna do this in X, no, without any time frame attached to it. So you have to have a time bound. So first and foremost, I would like all of you to sit down, if you're by yourself, with yourself, or with your significant other, and try to understand what your financial needs are. And when you're understanding your financial needs, first and foremost, we need to talk about cash flow. How much income are you bringing on the table? Like, what is your combined income? How much cash you're bringing? from your work, whatever your W-2 or your practice, and how much cash flow is coming in from your investment, which could be investment attached in your work if somebody has investments coming through their surgical center, so on and so forth. And also, your passive investments. I'm sure some or most of you already have some passive investments going on. So that would be that. And plus, if you're having, if you're running some other businesses, what is the total amount of cash flow that's coming in? Number two would be to understand if, investing in an equity and having real estate investment matters to you. If you just want to invest into a fund where you will be getting passive income, or if you just really do want to invest into a property where you'll have passive income coming in, but you also have equity in the property. So that's also something that you have to kind of make a plan for yourself. Tax liability. What tax bracket do you fall in? What are you going to do about reducing your tax? So that is definitely, you know, big chunks of things that you kind of have to think about at this point in time. Your next step would be to make short-term and long-term goals. I think, the first thing that really helps to kind of start and streamline this process would be to make a list of what are your expected expenses for the whole year. That would include your rent, your mortgage, your transportation, kids' education, food, you know, electricity bills, your general utilities, all of that stuff, childcare, like how much is your basic, you know, um, expense for that year. And once you've covered that expense, that means that, okay, that I'm good. I'm making enough money to allow me to have financial security. I'm going to have a house. I'm going to be able to pay my mortgage. I haven't bought like a $15 million house that I'm just stuck with a mortgage that I cannot pay. Or, just making that goal for yourself that, I'm going to achieve that for myself. And then the next step would be moving towards financial vitality, um, which would be that you have enough cash flow coming in for you to be able to buy some extra clothes, a luxury bag, so on and so forth, things that you enjoy. You have money to pay for that. And of course, financial independence is when you have enough money that is coming in, through a passive income stream, that is passive income that is enough for you to have financial security, enough for you to pay for your basic expenses, as well as financial vitality that you're able to pay for your co-clothes or your dining out or just very small leisurely activities, and maybe also able to pay for some vacations or travel, and you're not depending on your job. Like this is the kind of goal that most of us want to set for ourselves, that okay, eventually, maybe not this year, but in 5 years or 10 years or 15 years from now, and that time frame is different for everyone. I would like to be financially independent. And of course, that time frame also depends on what stage of career you're in. If you're 45 years old versus if you're starting your career and you're 33 years old, so on and so forth. I mean, it really does vary from one person to another. But having a financial, like having short-term goals and having long-term goals in mind really helps. Now, ultimately, everyone's dream would be to be financially free, which we call as financial freedom, in which you can do whatever you want to do with whoever you want to do it with. Go on a luxury vacation, go buy whatever you want to buy, spend money without ever having to think about what work you're doing, because you have enough money coming in from your investments that you just never have to work, and you have just ton of money there. Now that is financial freedom. That is the most stress-free state that you could be from your, of course, from your financial perspective, and that's what everybody's dream would be. Now, once you have these SMART goals for 2024 set, you have to figure out that, okay, I have this 2024 um, goal said that, okay, that I have this 2024 plan, I have this much money, cash flow coming in, I have to pay all these expenses. So I have to make sure I have those expenses covered. I'm investing into my 401k or my whatever my health I guess insurances and liabilities or whatever you're paying for. I have that covered. And then I have about 3 to 6 months of emergency fund. Now, if I have all of that, now what do I do with my excess money? That is where we kind of come in, where we come in with options and we start thinking about options of investing and reinvesting. And then ultimately that money compounding and helping you with your financial goals next year. So and that's how eventually over years you're going to reach to financial independence because you're going to compound your investments, start slow, eventually build up and reach a point in which you'll be able to be hopefully for sure financially independent and maybe financially free, which is everyone's dream at that time. So a couple of things. I think I do want all of you to kind of be very clear about active and passive investing. Now, that is what I felt is the biggest sort of um, blockade that people, particularly healthcare providers, have problems with is that we are um, we take on responsibility. By nature, we are people who um, do not trust um, maybe a lot of people more than ourselves. We are very risk averse and we like to work a lot. So a lot of my healthcare partners or healthcare colleagues that I work with, whenever we're discussing, investment opportunities, a lot of times they're just wondering over how can they, actively manage a real estate investment, how do they get started with it, how do analyze and go over numbers, so on and so forth. And I feel like, with the amount of time that we have between our work, our life, because our work takes such a big part of our time, you don't get as much time to educate yourself or to study about exactly how to get things started or rolling. It's as you probably, I mean, you're sitting in this webinar today, you would understand that this is a whole new, almost like you have to really educate yourself. And because of that, when they don't reach that point, it's year after year after year where they're just making some poor financial decisions for themselves, keep their money in their bank account, or they don't invest it wisely. This money is being exposed to inflation, or they might, talk to other friends, probably invest their money into stock market. The stock market is very volatile. They may lose or make money, and that stresses them out even more. I think, to start off, at least, and even for a long term, which I, as a healthcare professional myself, I think passive investing is the way to go for us. That is what I tell most people is that you should educate yourself, find a very good team that you trust and that you wanna work with. Find people or an investment group like Hedwig Capital, where you have people who you really really can rely on and who are very sure that they're not gonna mess or try to do their best with getting the most and making the most out of your money. And choosing and kind of going from there and investing with them and have your eyes on cash flow, like have your eyes on what are you getting out of your investment, like how much money are you actually making, and that should be our goal. Now, active investment may be for some people who either are part-time or who have spouses who can help them. So of course, active investment opportunities are something that they could explore. But if you want to get started, I think passive investing is the way to go. It's much more stress-free. You're still making the same, or you're still making, getting profit from, of course, from your investment. You're still getting tax benefits, and that would be the way to go. But of course, your job in this whole process would be to find a really, really good team that you wanna work with. Now, factors to choose before considering an active or a passive investment. would be as we talked about. And we've also talked about different benefits that would be for busy healthcare professionals. Of course, the biggest advantage is to not be spending a lot of time doing that. When you're a passive investor, mostly you spend maybe an hour every 2 weeks going over the financials that you're getting. If you have any questions, kind of discussing it with the financial officer of the company or the team that you've invested with or the investment platform. And that's pretty much about it. And keeping an eye on making sure you're getting returns from your investments. Now, the next step would be how to start passively investing. So at least with Headway Capital, how you start passive investing would be to get on a call with us and to first explore what options you have. Try for us to know you, for you to know us as well, and for us to figure out what part of where in life are you with your investing journey, and what are your future goals. So that would be the first thing that you would start off with. And definitely, I think it's ultimately it's all about trust, about us trusting our investors and our investors trusting us. So common mistakes that I would say that people make in investing is number one would be neglecting your liquidity needs. Now, this could be both ways. A lot of times, it's people keep a lot of money liquid, sitting in their bank account, being exposed to inflation, not investing that wisely. So, of course, you don't want to do that. And number two would be investing everything and not realizing that maybe something happens and then they need their money back. And if it's a long-term investment, it may not be possible for you to get the money back in the time frame that you would like to get it back in. So of course, understanding how much money you need to have liquid with you is really, really important. For most people, I think the approximate sum would be about 3 to 6 months of emergency fund at least. But if you have your 1 year, 3 year, and 5 year goals in mind, you would be able to get an estimate about, approximately how much money I will or may need in the future. Of course, that we're looking diversification. Diversification is really, really important in investing. You just don't want to invest all your money into a volatile stock market. Even 401k is exposed to market inflation. Like, I would definitely encourage everyone to invest into all these retirement funds. I do that as well, but max that out for sure. But you have to look for diversification, and investing in real estate is a very good way to diversify, particularly with how stable real estate investment can be, even with the current market. With all the interest rates that we're seeing, we are still seeing good returns from real estate investments, particularly if your investment is a quality investment. It was chosen. There was a good amount of work and thought that was placed into it, and of course the person who's running it is very careful with making sure that you're getting the maximum returns out of it. You should make sure you do not underestimate your tax implications. Whenever you're thinking of investing, just make sure that you have to pay some tax on your investment, depending on if you're investing into stock market. Of course, you have tax implications with investing into stock market or other investments as well. With real estate, of course, you get tax advantages, but everybody's personal, how much tax advantage they can get is different. So that would be something that you have to kind of go over with your own CPA to see what and how much tax advantage you can get. Do not try to do it all. Nobody can do it. Nobody can do it all. If you're full-time, a professional healthcare provider who wants to do really good at his work, who wants to, provide quality, good patient care at the same time, grow their own practice, or just I know you just want to do really well at your job, plus you're trying to invest your money and manage all of it. You're just setting yourself up for failure. Do not try to do it all. Get help. Get people, get partners that you trust, and try to do with a group of people, so that and that also helps with dividing risk. So you're not taking all the risk there are other people sharing the risk with you. You're chasing high returns without risk assessment. Now, some of my colleagues who I've talked to really actively follow stock market every day. They're flipping their money, flipping stocks, getting getting high returns sometimes, and sometimes also there that can work very negatively and not in their favor. So you should just also look for stability. I guess a lot of us do realize that medicine, we are healthcare providers, so hopefully there was a part of us that wanted stability in our career, which is why we chose this profession in addition to everybody's personal motivation. But you should, and when you're investing, you should look for something that is stable, that is low risk, and you should not always chase high returns, because even if you're chasing high returns, you may get high returns, but you may get, those returns may crash really fast as well. So you should always choose something that's relatively more stable, and that's what I have done. And do not trust everything to your financial advisor. Your financial advisor is making money off of you. So every time a financial advisor, I mean, it depends. If your financial advisor taking a commission, or your financial advisor is on a fixed payment from you, it just really depends. But and I'm not against. I think financial advisors are great, but just be savvy that you don't have to trust them 100% with your financial goals, because they they make money upfront from you investing, and they're not taking the risk that you are taking because it's your money. However, when you invest with us, we're taking the risk with you because we are a partner with you. Our money is invested into the same um, uh, asset, or the same investment opportunity similar to your money, and actually we probably most likely will be investing more than you are. And of course, always balance your career with investing opportunities. Just make sure that you're using, discussing with other professionals. You are focusing on your own job, and using your time to discuss investment opportunities with others, get ideas, sit on the webinars like you're sitting on today, and get more experience through every other's experience as well. Build a very trusted investment network. That's really important. You build a trusted network of friends and family. You have to build a trusted investment network where people have similar financial goals as you do, and are in the journey with you. Keep your stress at bay and educate yourself. Education is the most important thing. So the more you educate, the more you understand how this is done, and the more risk you'll be able to take just because you know better. Okay, remember, investing is a journey. You have to start now to reach your destination. You're never late, but you're never early as well. And I think that's where we're having issues. A lot of people I talk to who are early in their career, they're just kind of thinking about it, but they're not getting on that or starting that journey. They may be talking to a few people, but just not getting serious about it. So you have to start now. Start now. Think about it. Think about your future, and think about what you're gonna do with all the money that you're making and not using it. So a couple of questions for you that you should take home with you would be: how do my current financial goals align with my current aspirations in healthcare? Am I compromising one or the other while trying to achieve a financial independence? Am I compromising my work? Or if I'm spending too much time at my work, am I compromising investing opportunities? So you should make sure that you balance that, and also make sure that your financial goals are in line with your aspirations in healthcare. Number two is: what steps can I take today to start and improve my journey in passive real estate investing? So that would be, of course, start with education and find a team that you can trust, and get on a call with us. We'll provide you with knowledge, education, and opportunities to invest. And how can I effectively balance my demanding healthcare career with smart investing opportunities? That's where passive investing comes in. Your passive investing is easy. It's you, as long as you've done your due diligence, and done your homework over a deal. This deal will work. You trust the operators. You trust the team that you're working with, and you're getting returns. This is the easiest way to get to do smart investing. You'll see your money coming in into bank accounts. You'll be getting your financials, and you won't be spending too much time. So you definitely will be adjusting your balancing your healthcare career with smart investing as well. So final statement, of course, we've kind of talked about it a lot, would be just get on this journey. It's never too early, but it could be too late, but it's never too late if you haven't started yet. Passive investing opportunities. And so first and foremost, at least at Headway Capital, here we have investment opportunities in apartments. So we own and manage apartment complexes, and we keep growing. So we have new opportunities in apartments that are coming up. Now, this a multifamily apartment, investing in apartments is, of course, a long-term investing commitment. So you have to understand that once you invest in it, your money maybe with the investment till the investment sells. Of course, there are some other options to work around it as well, but these are mostly long-term investment opportunities. They have the highest returns because your money really grows over the years, and you get a ton of really, really good profit when you actually sell the, 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 the asset. So this is definitely a long-term investment opportunity. For a lot of real estate, for a lot of healthcare professionals who are pretty much starting off with a journey, or for everybody essentially, I think the real estate income fund is a very good way to start investing. This income fund, which we started not too long ago, was it's just an open fund where you invest a set dollar amount, and you start getting 8% returns on that amount. Now 8% return per year. Now you that money is liquid. So with a 3 month notice, you can get that money back, which means that this is not a long-term commitment. For instance, if you invest $100,000 and you tell us 3 months in advance that I have this commitment, I need this much X amount of money out for in X amount of time, we can do that for you. So this is not a long-term investment option. Works really well, has guaranteed returns, and of course, I think rather than having your money sit in the bank account, this is really, really good place to invest your money. And also allows you to start, the investing journey, start at least get into investing into real estate for you to understand how it works. Once you start reading, going over the returns, financials, I think it really helps to build up the momentum. And of course, we have options with investing in car washes as well. We closed a portfolio last year. It's doing really, really well. The good thing about the car wash portfolio that we closed was that it was an investment opportunity in which we invested in the actual car wash business as well as the equity. So the real estate. So it's really, really lucrative opportunity, and we're seeing really high returns from that as well. So of course, these are the major investing opportunities that are being offered at Big Capital. And if you are interested or want to get access to our private investor invest in real estate offering, you will need to join our private investor club. We of course, do send out education emails to everyone who's interested, but you have to get onto the list to actually see an offering. Now, I do tell people that they have to understand that once an offering opens, it fills up really quickly, and you want to have your homework done before in advance, and want to be on the list so that you have access to the offering. You're in that time frame, and you can just go ahead and shoot and invest because it is very time sensitive. a lot of times we fill up really quickly because with the current investors that we have. So being a part of our exclusive investor club would be really important. Now Henry Capital does offer you member only in-person events. So we have opportunities for you to tour our properties where we'll take you around, show how we work, have you get introduced to our operators, and you can actually see and feel and touch, your investment or potential investment, or what your potential investment may look like. We have online real estate education webinars. This is one of the series that you're attending right now. But of course, our Director of Investor Relations, Brian, as well as they do different education webinars as well. And then you have exclusive opportunity to get the first information or tips on the private investment, on the passive investment opportunities that we offer. What are the requirements? You must submit an application first that you're interested. You must complete a qualification call. It's mostly completed by Brian, in which he will go over and make sure that you fulfill all the checks that are needed for us, for you to be an investor with us, and you must be an accredited investor. Now, of course, you can also search and see if you could be an accredited investor, but in general, it's at least having a 1 million net worth, not including your primary residence, or a 200K plus income single, or 300K plus combined income would make you an accredited investor. So you must be an accredited investor to invest with Hedwig Capital. Now, if you want to join our private investor club, please scan this QR code. It will take you to the application, which you can fill and schedule a phone call with Brian. And I guess that is it. This is a QR code for you to learn more about Hedwig Capital Income Fund offering. Guys, this income fund is really solid. It has good returns, low risk. Your money is liquid. I think that there is no reason why somebody shouldn't invest in this income fund, and we've had solid returns which are guaranteed every year. So definitely look into it. I do want people to understand that we have a 25K minimum investment requirement to be able to invest in this income fund. So that would be the minimum requirement for us. If you have any questions or concerns, please reach out to us. Our number is 281-559-7061. If you want to get these slides, please just text me. I'd be happy to help. Thank you so much. And these are some of the emails for your reference. Take care.